Good morning, students. Right, so let us get going on this rather chilly morning, I must say. This class, Levante, excuse me, up until what time? It'll be at the latest 11:15. So it's supposed to be about an hour and a half. We might finish a little bit early, who knows? But uh, the class time is available until 11:15. Right, ladies and gents. So I'm just going to start on the home page again, right? So that we can follow the thread how to get to the material. So we start on the home page. We go to our content per topic menu item. Excuse me. We scroll down. I've got a lot of extra items on my side. Don't worry. Um, then we go to recording of transactions, topic 4. So we click there. What I want us to do today is the chapter 4 illustrative example. So hopefully most of you have read through chapter 4 by now. So right at the end of chapter 4, you'll see there's a chapter 4. They call it the illustrative example. Unfortunately, I haven't received my ninth edition of Fundamental Accounting yet. I'm forced to still use the eighth edition. I'm sorry about that. But in the eighth edition, it's on page 51. Page 51 of the eighth edition. Perhaps someone can just type for us in the chat there on which page is the illustrative example in the ninth edition. Somebody can possibly type it for us there. Anyway, I've scanned it in. Excuse me, I don't know. I've got a frog in my throat this morning. I've scanned it in, so I'm going to display it in any case. So I'm going to click there on the chapter illustrative example. Now I've just got to share it with you. If you could just give me a second or two, please. I'm just waiting for it to appear on your side. Okay, it's not a perfect scan, but that's the best I could do. So if you look at that chapter illustrative example, ladies and gentlemen, let's maybe just first of all go and have a look of what is required of us. Uh, I don't think I've actually scanned that part in, but anyway, what we are going to be doing is for the last time, you already now know the accounting equation pretty well. So just for this last time, we're going to use the accounting equation. And then most importantly, we're going to go to that next step where we are going to start drawing up financial statements. Now, as we've said the other day, the first three or basic financial statements that we are going to be drawing up is a statement of profit or loss, a statement of changes in equity, and a statement of financial position. So that is our mission for this morning. Next time on Monday, during our Monday class, we are going to do from chapter 4, question number 4.12, I think it is. And then we are going to skip the accounting equation, and we are going to go directly to general journal entries. Right. So the general journal entries we'll do on Monday. So let us read through this example. They say Ayesha Hisham started a business and she calls it Absolute Hair on the 1st of March 2014 or 2024. That X you can put in any figure there. Let's just say 2004 to make it easy for ourselves. The business specializes in modern hairstyles for young executives. These are her transactions for the first month of business. Okay, so that is quite important information for us, ladies and gents. It's the first month of business, so there is no prior history, right? So there is no balance, or there are no balances being carried forward from a previous month. Also important there for us is these are the transactions for a month, not for a year. So those are just things that we should think about when we read through the question. Then they say, and these are the 10 transactions that we need to go through, and there's also some additional information that may or may not require some adjustments. So let us just look at the transactions first. So they say Ayesha deposited 50,000 rands in the current bank account as a capital contribution. Now, when they say the current bank account, we've got to assume that she's opened up a bank account in the name of the business. So that bank account will not be a personal bank account. It will be a bank account called Ayesha Isham Trading as Absolute Hair, as we said the other day. Right, ladies and gents, now let us just warm up our fingers a little bit. We are going to look at the solution a little bit later, all the various solutions. There are more than one. But if you can just type in the chat for me, in that particular case, which account are you going to debit? Let us just start with the debit. That's always, or anything that has to do with, well, I don't want to give it away now. Let's first see what answer you come up with. Yes, who wants to try? Money being deposited into the bank account. Which account are we going to debit? Somebody's got to try. Bank account, there we go. Right. So we're going to debit the bank account. Remember, the bank account normally is an asset. Assets increase, and obviously, if you deposit money into the bank account, that asset bank will increase. And we know that assets increase on the debit side. Thank you for that answer, Kensani. Then also, ladies and gentlemen, which account are we going to credit? Because we know that for each debit, there's got to be one or more credits that equal the total of our debits. Which account are we going to credit? It will be an equity account. Thank you, Ayabonga. It will be an equity account. Quite correct. What will we call that equity account? Owner's equity, you can call it owner's equity, ladies and gents. Thank you, Logan. Or you can call it capital. Thank you, Levante. So normally we would call this account, even though it is equity and it is owner's equity. So that is the element. That is very true. So those answers are correct. That is the element. But normally we would call this account either capital, or sometimes the accountant will call it owner's capital, right? So we've got that first entry already done and dusted. Then our second one, they say issued a check to Hista Properties to pay for the rent for the first 2 months, 3,200. Now we'll see later on that they say here the rent in transaction number 2 above was paid for 2 months and therefore is not an expense for the current month. Well, it is partially an expense for the current month, but not the full amount. So there are actually two ways you can go about this. So let us just assume for the moment, uh, we'll do both scenarios. Let us assume for the moment we haven't seen this yet. We haven't seen this additional information number A yet. If we only have that information, issued a check to Hista Properties to pay the rent for the first 2 months, 3,200. Which account would you debit, ladies and gentlemen? And I know that they are still talking about a check here in the 9th edition. They probably will say she issued an electronic funds transfer. Which account will we debit? Remember, if it's a debit, it can only be one of two things. It can either be an expense or it can be an asset. Now, have we purchased an asset? The answer is no. So it can only be an expense. What are we going to call that expense? This is very logical. Somebody try rent expense. Thank you, Levante. There we go. So we're going to call this rent expense. Rent expense. Thank you, Unati. Spot on. Right. So that is our debit, but now we also have to have a credit. Which account are we going to credit, ladies and gentlemen? We have now made a payment. The asset called bank. There we go. Thank you, Ayabonga. Thank you, Liena. Okay, Liema. Thank you. So bank account will be credited. So if we did not have that additional information, we would have used which amount? We would have used the amount 3,200, right? And then later on, as we'll see, this is the situation actually in the solution as well. Later on, we'll make an adjustment for it. But let us just assume the second scenario as well. Let's say we already realized here that it is the rent for 2 months. With how much would we then have debited our rent expense account? Because we only want to recognize the expense for 1 month, the first month of this business's existence. With how much would we have debited that account then? The account called rent expense. Thank you. Oh, thank you, Jardine. Thank you, Levante. There we go. We would have debited with 1,600. In other words, only half of the 3,200, because only half of that 3,200 relates to the rent for this month. Right. Which other account would we then have debited? Because our credit is still going to be 3,200. We must remember that we made a payment of 3,200. So the credit is still 3,200. But now we've only debited our rent expense with 1,600. So clearly we've got to debit another account with the remaining 1,600. What would we call that account? This one is a little bit more difficult. Those of you who had accounting at school who have read through the chapter 4 would know. Well, you can be a little bit generic, or you can be very specific. So you can either call that account rent paid in advance, because remember, this is what really happened. You paid the second month's rent in advance, or expenses prepaid. Thank you, Fumani. That is exactly it, right? You can also call it expenses prepaid. So that is basically a more generic description. So if you prepay rent, or you prepay your electricity or any other expense, you can use that same account that Fumani indicated there, and Kensani as well, right? Prepaid expenses or expenses prepaid, same thing. Okay, ladies and gentlemen, if we originally debited the expense account, the rent expense, with 3,200, that means later on, before we draw up our financial statements, we will have to go and make an adjustment. So then we would have had another journal entry where we would have credited our rent expense with 1,600 to decrease it to 1,600, and then we would have debited the prepaid expenses account. Okay. Now let's go to the third one. Purchased hair care equipment and paid by check, or let's call that now electronic funds transfer. Purchased hair care equipment and paid by electronic funds transfer, 30,000 rands. Now, as that Dr. Titz in that video that we played the other day also mentioned, sometimes the easiest part of any journal is the one that involves the flow of money. So let us maybe start there. Clearly, if we are making a payment, we are going to involve our bank account. So are we going to debit our bank account, or are we going to credit our bank account? So now I'm asking a similar question as earlier, but slightly in a different way. Are we going to debit or credit our bank account? Because clearly the bank account is involved. Credit, credit, credit. Okay, everybody's got that. Right, so we're going to credit it. Money flows out of it. Our bank account is an asset. It decreases our asset, and we know that assets decrease on the credit side, right? The credit side, ladies and gentlemen. Now we've also got to debit another account with that same amount of 30,000 Rand. So what are we going to call that account? First of all, we already know now that if we are going to debit something, it's either an expense or an asset. Now, let us go through the process here. In this case, where she purchased hair care equipment, which she is going to be using for the next 5 or 6 or 7 years or for whatever time, right? Is that an expense or is it an asset? If we can just perhaps determine that first. Nice try, Nick. Thank you, Logan. Thank you, all of the rest there. Right, this is really an asset. So those equipment could be hair dryers or whatever the case may be. It can be scissors. The fact is, we are not going to write it off as an expense because it complies with the definition of an asset. Right? You remember the definition of an asset? So this is going to be used over a long period of time. So what are we going to call that account? Once again, accounting can be very logical most of the time. So what are we going to call that asset account? Equipment. Thank you, Jardine. Uh, Elmer, just be careful. Trading inventory is where where you purchase the asset with the intention to sell it over the short term, with the intention to sell it at a profit, right? In this case, her intention is not to sell it at a profit. Her intention is to use it to generate economic benefits for her business, right? So there's actually quite a big difference between the two. So yes, we can call it equipment. I would tend to be more specific. I would rather call it hair care equipment, but equipment won't be wrong as you realize it's a non-current asset. Okay, so we are done with that one, ladies and gentlemen. Let's go to number 4. They say paid 750 rands to Telkom for telephone expenses. Now that one I think is pretty easy. Uh, Again, maybe we will start with the easiest one. We say that we are making a payment. She paid 750 Rand, so clearly the bank account will be involved. So in this case, ladies and gentlemen, are we going to debit or credit the bank account? Correct, correct, all correct there. Exactly. The money flows out of the bank account, so we have to credit the bank account. Just to go through that little argument one last time, the bank account is an asset. Money is leaving the asset, so the asset decreases, and we know that assets decrease on the credit side. So we've credited our bank account with 750. Which account are we now going to debit with 750 rands? It's actually so logical. It's right in front of you, actually. Yes, Nick, it will be an expense. So the element will be an expense, quite correct. But now we've got to give that account a name, and there Unati has done it for us. Thank you, Unati. Telephone expenses, right? Just remember the element is an expense, which is quite correct. But now we will have many kinds of expenses. So we have to be very specific so that at the end of the day, we make it easy for ourselves to draw up our financial statements. In this case, it will involve your statement of profit or loss. So we are going to debit telephone expenses with 750 rands. Let's go to the next one, and now you'll see why I would have been specific with number 3, and I would rather have called it hair care equipment, because now you can see she's also buying a different kind of equipment. So in transaction number 5, they say she purchased office equipment on credit from Injani suppliers, 24,000 rands. Now remember last Monday when we watched that video of Dr. Tits, she had a similar kind of transaction, and there she said it was purchased on account. And then I stopped the video there, and I said that very often, instead of saying on account, they would say on credit, but it means the same thing. So purchased office equipment on credit from Injani Suppliers, 24,000 rands. Now, does this involve our bank account? Does this transaction involve our bank account at all? Just yes or no? No, thank you, Levante. Uh, thank you, Liema. Okay, oh, my screen needs a cleaning there. Thank you, Stanley. Spoon, sorry, my screen, I must wipe it, I must clean my screen. Um, right, so it does not involve the bank account at all. So now we don't have that easy exit, as they say. We can simply say one side of the entry is done and dusted. So, ladies and gentlemen, let's maybe just start with the debit in this case. Which account will we debit? What are we going to call that account? Once again, it's very logical, and most of the time, financial accounting is very logical. So you actually have the name of the account in front of you. So you're going to use that information to create the name of the account. Office equipment, thank you, Unati. Office equipment, spot on. Right, so we're simply going to call it office equipment, and once again, we know it is an asset. She's not purchasing that office equipment to resell. Her business is not buying and selling office equipment. The office equipment is there for her to do her books at the end of the day, or to do some administrative tasks at the end of the day, right? So she's going to be using it over a long period of time, for years and years and years. So it clearly is a non-current asset, office equipment. And which account are we going to credit, ladies and gents? Liabilities, exactly. That is the element. Thank you, Liema. That is the element, is liability. So what specific liability are we going to credit? Now we may have many liabilities, right? Hopefully not too many, but I mean, it's possible that we can have a variety of liabilities. So now we've got to give that account a very specific name. Once again, it all depends on the accountant's judgment. There are quite a number of names that you can call that account, but they all come to the same thing. It's like I often joke. It's some people pronounce tomato, some people pronounce it tomato, but whether you call it tomato or tomato, it means exactly the same thing. So, what are you going to call the account that you are going to credit? Accounts payable. Thank you, Logan. That is the way that you will disclose it in any case. So accounts payable is a very good name for that account. Or you could have called it your creditors account, ladies and gentlemen. Like I say, that depends on you as an accountant, or even your creditors control. If you are going to have a variety of creditors, you're going to have dozens of creditors, then you will probably start a sub ledger. We'll talk about special ledgers and journals in the third term. Then you would create a whole creditors ledger, and then you'll have a creditors control account in your general ledger, right? So the fact is, it's accounts payable or creditors control, right? So in other words, like somebody said up there, the element is a liability. Okay, so we're done with that one. So now let's go to transaction number 6, ladies and gents. They say purchased hair care products for cash and paid 9,000 rand. So now this is hair care products. We've got to think about this. For 9,000 rands, it is the accounting policy of Absolute Hair. This is Ayesha's business, to first record hair products as an expense when purchased. So when they purchase it, they record it as an expense. Alternatively, another policy would have been that they could have recorded it initially as an asset, right? So there are two possibilities. Whichever possibility you use, you'll have to account at the end of your month or at the end of your year, you'll have to account for the unused, the remaining hair care products that has not been used yet. But in this case, they say her policy or her accountant's policy is to first record hair products as an expense when purchased. So, right, ladies and gentlemen, in this particular case, they say for cash and paid 9,000 Rand. So, in this case, the bank is involved. So, that makes it very easy for ourselves. So, what are we going to do with our bank account? Debit or credit it? Credit again. Thank you. There we go. Thank you, Nalindi. Thank you, Elma. There we go. It's an expense. So I'm not going to repeat that whole argument. You know, your bank account is an asset. Money flows out of the bank account, assets decrease on the credit side. So you're going to credit your bank account with 9,000 rands. Now, according to this little policy that they have for the business, which account are we going to debit? This one is a little bit more difficult. I think I should help you out here on this one. It will be part of your equity. It will affect your equity. You're quite right, Ayabonga. It will affect your equity because it is an expense. They are recording it as an expense. So it will definitely affect your equity, but now you've got to be specific. You've got to give that account a name. What I would have called it, ladies and gentlemen, is at this stage, I would have called it hair care products expense, right? Because that describes exactly what it is. Because we've purchased hair care products, so this will be shampoos and conditioners and dyes and bleach. I'm not an expert. I'm just thinking of a few possibilities. So that is what she's purchased here for the business, right? So it is hair care products. She is recognizing it initially as an expense. So therefore, I would call it hair care products expense. We'll see later on when we do our adjustments that the unused portion we will then call hair care products on hand or hair care products inventory if you wish. Right. So there are again a few possible names that we can give that account. And that will then be an asset at the end of the month. Okay, so we'll get back to that when we draw our financial statements. Then finally we get some money. We've just been spending some money. So finally now we also receive money. So here they say received. Now this is transaction number 7. Received 13,620 rands in cash. And like we said on Monday, we assume that all of the cash has been deposited into our bank account. So in cash and checks or credit card slips or debit card slips, whatever source document we have received there, or we've received the cash, but whatever source document we are going to be making out, right? For services to customers, right, ladies and gentlemen. So we see that we have received money, we have deposited into our bank account, or at least we assume that. So clearly our bank account will be involved in this transaction. So let us ask the question now. Are we going to debit our bank account or are we going to credit our bank account? Thank you so much. Oh, lots and lots of answers there, and they are all spot on. Bank is still an asset, but now the asset increases, and we know that assets increase on the debit side. Thank you so much for all of those answers. Yes, quite correct. So we are going to debit our bank account with that 13,620. But now we've also got to credit an account with that same amount of 13,620. And we've got to give that account a name. So what are we going to call that account, ladies and gents? Services rendered. Thank you. Thank you, Nalindi. Thank you, Ayabunga. Thank you, Sisanda. Liema. Okay, now we've got a lot of answers there. All spot on, right? We can simply call it services rendered. We know that this is a hair salon, so we know that it has something to do with services, right? So services rendered. Spot on, ladies and gents. Now let's go to the next transaction, number 8. There they say an invoice, as you know, as we've seen on Monday, an invoice is a source document that we generate when we charge our customers, right? Especially if it's on credit. So here they say invoiced Brash Limited, a local business. So this is obviously a local business that intends to make use a lot for their staff, I guess. For their staff, they're going to send their staff on a regular basis to this hair salon. So they invoiced Brash Limited, a local business who opened an account with Absolute Hair. So in other words, Absolute Hair, our business, is providing them with credit facilities, right? So they only have to pay at the end of of the next month, for instance, right? Depending on how long we give them credit for. It might even only be at the end of the following month. The fact remains, we invoiced them for 8,700 rands for services rendered. Now, let's just ask the question first. At this stage, is our bank account involved? Yes or no? No, thank you, Liema. Thank you, Logan. No, money is not flowing. Cash is not flowing at this stage yet. So our bank account is not involved. So, ladies and gentlemen, that means we'll have to find a debit account and a credit account that does not involve the bank account. Doesn't matter which one we do first. Let's maybe start with the debit account. Which account will we debit, ladies and gentlemen? Obviously, it has to be either an asset or an expense. If it's a debit, in this case, it's not an expense. I think we can all see that, we can feel that, we can sense that this is not an expense. In fact, it is income, right? It is income. So which account are we going to debit? It can only be an asset then. If it's not an expense, it has to be an asset. What are we going to call that asset? Again, there are more than one possible name. That it all depends on the accountant. But let's maybe think about 2 or 3 possible names for that account. We had its opposite a little while ago. There we go. We can call it debtors control. Thank you, Jadine. Or Elma. Thank you. Accounts receivable. Again, Elma, your name was just behind a blotch on my screen, which I will clean a little bit later on. So quite correct, right? You can call it debtors control or debtors, or you can call it accounts receivable. When you disclose it in your statement of financial position, you will disclose it as accounts receivable in any case. But you can call it debtors control or debtors in your general ledger. Spot on, ladies and gentlemen. So that means we have accrued the services that we've rendered. We've now indicated that that business, what's it called, Brash Limited, they owe us 8,700 for the services that we've rendered. So what really happens in practice, they've sent their staff to our hair salon, to our Absolute Hair business. We've dressed them. They dressed their hair, so we've gave them fancy haircuts, or we've styled them pretty. Uh, and then at the end of the month, the total of all the staff from that business that made use of our services, we are going to send an invoice for all the various times that we've performed some hairdressing services for them, right? So that is a total of all the services that we've provided for the staff of that client of our, or that customer of ours. Which account are we going to credit, ladies and gents? It's still actually in the chat. Services rendered. Thank you, Nilindi. There we go. Services rendered. So that is still for the hairdressing services. It's still income. It's still going to increase, obviously, our equity. So we will call that services rendered. In fact, they tell us there that that 8,000 rand was for services rendered. So once again, very logical, ladies and gents. Okay, two more transactions to go. Excuse me, they say paid in Johnny suppliers 4,000 rands on our account. Now let's just see if we can see in Johnny suppliers. There we see in transaction number 5, they said that we purchased office equipment on credit. On credit, in other words, we credited our accounts payable account for 24,000 rands. Now we pay them 4,000 rands on that account. So let's maybe just ask a very simple little question, but it will help us a little bit. After we've paid that 4,000 rands, right? After we've paid them the 4,000 rands, how much do we still owe them? You can type that for us, please. How much do we owe them after we paid them 4,000 rands? 20,000 rands. Thank you, Shah. Thank you, Nati. Thank you, everybody else. We've got a lot of answers, all correct. So then we owe them 20,000. So clearly, after we have recorded this transaction, after we've recorded the transaction, the balance on our accounts payable account must therefore be 20,000. But at the moment, the balance on that account is 24,000. And we know that it is a credit balance because we credited the accounts payable when we looked at transaction number 5. Right. So now it means that that liability, that credit balance needs to decrease. So, ladies and gentlemen, if a liability decreases, on which side does it decrease? The debit side or the credit side? Debit side. Thank you, Nati. Thank you, Logan. There we go. It's going to decrease on the debit side. So, ladies and gentlemen, which account are we going to debit? If you can just type that. I know that everybody knows the answer now after this little discussion, but I just want to make sure. I want to be 100% certain that we are on the same page. So, which account are we debiting? Accounts payable. Thank you, Logan, Nati, Phoenicia, everyone. Thank you. Accounts payable. So we are debiting accounts payable. Which account are we going to credit, ladies and gentlemen? This one is again very easy. Which account do we credit? Bank account, because we made a payment. We made a payment. They say they're clearly paid in Johnny Supplies. Thank you for all those answers. You are spot on. So we are crediting the bank account and we are debiting uh, our accounts payable account. So now after we've debited that account with 4,000 rands, it means that the remaining outstanding balance, the remaining credit balance on the accounts payable account is now 20,000 rands, right? Because it has been reduced by the 4,000 rands. We've got all that. Let's go to our last transaction, number 10. They say paid salaries to the stylists and herself for the month, 12,300 rand. So paid salaries to the stylist. So she's got one or two other people working for her, and to herself, 12,400 rands. Does it involve the bank account? Yes or no? Yes, it does. Thank you, Spoon. There we go. Okay, thank you, everyone. It does involve the bank account, so that makes it easy. Are we going to debit or credit our bank account? Credit, thank you so much. Money is flowing out of our bank accounts. We're going to credit the bank account. Now we need an equal debit. We also need a debit for 12,400. What are we going to call that debit? It can only be an asset or an expense. In this case, it is clearly not an asset. It has to be an expense. Salaries. Thank you. Thank you, Nick. Right. So salaries or salaries expense. Thank you, Nati. Spot on, right? So our debit is equally easy. We're going to debit salaries or salaries expense. As you can see, it is very logical. They say, what did we pay? We paid salaries. So what are we going to call that account? Salaries or salaries expense. Then those are the 10 transactions. We are going to look at its effect on the accounting equation soon, and then we're going to draw up our financial statements. But there are just 3 additional things that we've got to consider. So let's just go through them. They say the rent in transaction number 2. Now we've already discussed that. That 3,200 rands was paid for 2 months and therefore is not an expense for the current month. So if we had split it up initially, we did that in our second method, right? If you remember, we did both situations. So if we split it up already, if we only debited our what was it, rent, if we only debited the rent expense with 1,600 and we already debited our prepaid expenses with also 1,600, then it means we do not have to make any adjustment, right? So the adjustment is not necessary. But if we had debited the rent expense with the full 3,200, then we would have had to make that adjustment. Now we've already discussed the adjustment. You would then credit the rent expense with 1,600. If you had debited it initially with 3,200, then you would have credited it with a 1,600 to decrease it to 1,600, and then you would have debited your prepaid expenses. Then the adjustment would have been necessary. Then they say number B, the hair care equipment. The hair care equipment is likely to last about 2.5 years. After that, it will have no value. So this is where the matter of depreciation comes in. So they are saying the hair care equipment is likely to last us 2.5 years, and after that, we can't get any money for it. It has no value. So it means that we have to depreciate it or write its value down over 2.5 years, but we'll have to do it monthly. Uh, to a zero figure, right? So we have to write it down to zero from its initial cost. What was the initial cost? 30,000 rand. So we've got to write it down over 2.5 years to eventually, after 2.5 years, have a zero balance, a zero value. Right. We are going to look at property, plant, and equipment in detail in the 4th term, but we still need we already need to know the very basics about depreciation. And then in number C, ladies and gentlemen, they say after the inventory count, so they counted all their hair care products now. This is all about the hair care products. That one in transaction number 6. So they say after the inventory count, Ayesha determined that there are hair care products bought at a cost of 5,200 rands that were not used during the months but will be used for later months. By the way, ladies and gents, if I can just come back to paragraph B, we've not only got hair care equipment, there's the hair care equipment, we also have office equipment. Where was that? There, we also have office equipment. So we've got hair care equipment and office equipment. So we'll have to depreciate both. This is a tricky one because they don't specifically mention it, but we'll have to depreciate that as well. Any case, let's go to C. So after the inventory count, so they've actually counted how many items they haven't used of the hair care products, the unused portion. Ayesha determined that there are hair care products bought at a cost of 5,200 rands that were not used during the month but will be used in later months. Now we'll have to make an adjustment for that as well. So let us first see how much hair care products did we buy. So we bought hair care products for 9,000 rands, and our policy was to debit the expense, the hair care products expense account. But not all of those products were used. In fact, 5,200 the value of 5,200 of those hair care products were not used. So that means that the expense for this month now we've got to think very carefully. The expense for this month is not 9,000 rands. Even though we debited the expense with 9,000 rands there, the expense isn't actually 9,000 rands. How much is the expense? I know this is a tricky question, but let's see if you can type for me in the chat there. How much is the expense for the month? Now I'll have to find a calculator myself before I can see whether you're correct or not. 9,000, what was it? 9,000? Let me just see 9,000. 9,000 was what we originally debited, but 5,200 is unused. So we minus the 5,200 gives us 3,800. Spot on. You're all correct. Wow. Levante, Logan, Lindy, Zisanda, right, spot on. You've got it right. So the expense for the month is actually 3,800. So that means that this we still have a debit balance on the hair care products expense of 9,000, but the actual expense is only 3,800. So now to reduce that expense to 3,800, right? I'm just going to repeat that. To reduce that 9,000 expense in the account to 3,800, what do we have to go and do with that hair care expense account? Debit it or credit it? On which side does an expense decrease? Remember, the expense account was debited with 9,000. Now we want to decrease it. So now we've got to go and credit it. There's the Sunday even gave us the amount there. Thank you all. Right. So it was originally debited with 9,000. We want to reduce it now to 3,800. So it means we have to go and credit that account with 5,200. Right. I hope we're all clear on that. Now, once we've credited that account with 5,200, it means that the expense, the balance on that account is actually 3,800. But now we've also got to debit an account, ladies and gentlemen. What are we going to call that account? Once again, there are quite a number of names that you can give it. I will give you my preferred name. But let me give you an opportunity to try first. Inventory on hand. Thank you, Elma. There we go. Inventory on hand. I would also have called it inventory on hand, or I would have called it hair care products on hand, or hair care inventory. There are many options, ladies and gentlemen, as long as you've got the principle clear that it is inventory. It is inventory and it is on hand and it consists of hair care products. Right. Okay, so I think we're all done with that. So now we can simply go and see what effect that has on our accounting equation, and then we are going to start drawing up our financial statements. Let us just pause there for a second. I've been talking and you've been answering, and I appreciate that. Thank you so much. But are there any questions from your side before we leave this page? Doesn't seem to be any. Okay, if there are no questions in the chat, there are no hands up. Sir, where can we find this exercise? Levante, I actually illustrated it right at the beginning, but I think I'll do it again for those who came in late. But you will see it on the recording, but I'm going to demonstrate it again in any case because I need to go to that to that page anyhow. So I'm just going to stop sharing that one, and then we are going to look at uh, uh, the page that we were. Now, I just want to make sure that I don't close the wrong tab. Okay, so there you can see, ladies and gentlemen, that is where we were. Let me just go back to the chat. Levante, so I'm just going to go through that little process again, students, if you'll forgive me. It will only take us a few seconds. so it's not going to take too much time. So what we did, Levante and everyone else that might have been a little bit late, we went to our content per topic. We clicked on from our homepage, we clicked on our content per topic. We are now busy with topic number 4, recording of transactions. There we are. And if we scroll down, we've covered all of that last Monday. So where we are now, let me just see. We've done all that. This one here, chapter 4, illustrative example. So it is below the videos that we watched. It is below the recordings of this year's classes and the one that's going to be made available later, the additional resources. So it's just below that, the illustrative example. So that first one there, that was the question. And now we've got the various solutions. So let us just briefly look at them as well. So I'm going to start with the accounting equation. Yeah, I thought I heard a beep there, but not. So now I'm going to start with the accounting equation, and then we're going to look at those 3 financial statements. So I'm going to click on the accounting equation solution, but now I've just got to go and share it. I'm not going to spend too much time on it because we've really discussed this pretty thoroughly. So I've just got to stop sharing that one. Let me just find that tab for us. Just waiting for it to appear. It's coming, it's coming, it's coming. And there we go. Okay, so that is, as you very well know by now, your accounting equation, right? So we don't have to go through all of that again, ladies and gentlemen. What I really just want us to look at are really the totals. So we see here, once we've recorded all of those transactions, we started with that amount that she deposited into the bank account, a capital account. The rent expense, in this case, like I mentioned, they debited the expense with a whole 3,200 and credited, obviously, debited rent expense and credited bank. That's why it's in brackets. What was there? The supplier invoice where we bought equipment, and we know that we bought that equipment on cash, so we reduce our bank account and we increase our equipment. So it's 2 assets that are being involved here. The bank account decreases, the asset, the equipment at cost increases. So there we have all our various transactions on the accounting equation worksheet, right? But let us now just see, once we've completed this whole accounting equation worksheet and we've done all our adjustments, and you can see all these adjustments have been included here in the equation. We don't have to actually go and do anything else. I just need to still speak about the depreciation, though. We'll talk about that. So then we simply go and add up all our totals. So we see the balance in our bank account. At the end of the month, the balance on the bank account at the end of the month is 4,270 Rand. So that we need to disclose in our statement of financial position. We also see that our total equipment there for the hair care products as well as the office equipment comes to 52,200. So we've also got to disclose that in our statement of financial position. Our debtors amount, we only issued that one invoice to that one customer. So the closing balance is 8,700. That also needs to be disclosed in our statement of financial position. Our expenses prepaid, that was that half of the rent amount that we paid for the next month. That also needs to be disclosed in our statement of financial position. And then our inventories, ladies and gentlemen, the unused portion of those hair care products must also be under our assets, must also be disclosed in our statement of financial position. And here we've got all the various accounts. That's either income or expenses. We've got the capital there, so that's neither an expense nor an income. That is the capital that the owner introduced, Ayesha introduced into the business. Then we've got the expense, rent expense, telephone expense, hair care products expense, service income or services rendered if you wish, salaries expense, and then the adjustments there. Then just when it comes to the depreciation, let us just discuss that, ladies and gentlemen. I think I heard something. So the test that we will write, it will be based on recording of transactions. Matomi, no. Recording of transactions, yes, but also the financial statements that we are starting to draw up today, right? That is why we had to delay the test. We should have been done with these items already, right? Was it not for a little hiccup that happened on the District 6 campus? So it also includes, does include the transactions, but it also includes the adjustments like we've just seen, and it also includes drawing up those three basic financial statements. Happy, Matome? That is included, the financial statements? Right, ladies and gents. So let us just talk about the depreciation expense. So they said that we are going to use the equipment for a matter of 2.5 years. So 2.5 years. How many months does that give us? If you can type in the chat for me, please. 30 months. Thank you, Nulindi. There we go. So we are going to be using it for a total of 30 months. At the end of that 30 months that we've used the various equipment, how much is it going to be worth? You can just type that for us as well. Once we've used it for 2.5 years or for 30 months, what is it going to be worth? Nothing. Right. Sorry for shouting. 0 rand. Thank you, Liema. There we go. Thank you. Spot on, Liema. It's going to be worth 0 rand. Right. It's going to be worthless. We cannot sell it because we've exhausted its capabilities. So therefore, ladies and gentlemen, that total amount of 52,200 rands of the equipment must be written off over 30 months. Now, remember, we are only doing the accounts for the first month. So it's only for 1 month. So what will be our depreciation expense for this 1 month? Let's see. 52,200 divided by 30 gives us 1,740. I'm sorry. I'm sorry. I took the depreciation into account. Obviously, that is the carrying amount. That's the carrying amount at the end of the month, right? But what was the total cost? I'm very sorry. The total cost was 30,000 plus 24,000. So our total cost was how much? If you can type for us there, please. What was the total cost of the equipment? 54,000. Thank you, Nalindi. So the total cost of the equipment was 54,000. So if we take that 54,000 and we divide it by the number of months that we are going to use it for, we divide that by 30 months, in other words, what is our depreciation therefore for this first month and for every month after that? 1,800. Thank you, Elma. So that's where the 1,800 comes from. So what we refer to it, ladies and gentlemen, when we get to PPE, we will expand on this. The cost is what did you just type? 54,000 rands. The depreciation as well as the accumulated depreciation at the end of this first month is 1,800. So that leaves us with the value. Sometimes they call it a book value. The preferred term is carrying amount or carrying value. At the end of that month is 52,200. So what they are really saying is because we've used it for a month, the value of the equipment is not 54,000 8,000 anymore because we've actually used up a value of 1,800 rands during the month. So what we estimate the value of the equipment to be after the first month is 52,200. Are there any questions on that? Do you understand the basic concept of depreciation? So next month we are also going to depreciate it by 1,800, right? In the following month. So that will reduce the carrying amount with another 1,800. So after the next month, our carrying amount, I'm just doing this off the top of my head, will be 50,400 rands, I think, right? So we will have reduced it by a further 1,800. Okay, so now let's go and draw up our statement of profit and loss, ladies and gents. Let me just pause there. Are there any questions at this stage? Doesn't seem to be any questions. Good or bad, I don't know. You're welcome to ask the questions. So let us go and have a look at our statement of profit or loss. Just going to have to go and find it. I found it, but now I've got to go and show it, display it to you. So let me just do that. Should be coming up soon. And there we are. Right. So that is what our statement of profit or loss and other comprehensive income, but other comprehensive income we only deal with as from financial accounting 2. So in financial accounting 2, we will also discuss what they refer to as other comprehensive income. But at this stage, it is simply really a statement of profit or loss. For the month ended 31st of March 2014. Right, ladies and gentlemen. So now we can simply use our totals that we've found in our accounting equation worksheet next Monday when we are going to do that question 4.12, I think it is. We'll do the journal entries and we'll do the ledger accounts. Then we'll see the whole flow of the transactions, the whole flow of data, right? So at this point in time, we start with our income. What income have we got? We've only got one source of revenue. Dr. Tietz used the term revenue the other day. We'll talk about revenue in financial accounting too as well. So revenue is your primary source of income. So it is a kind of income and it's your primary source of income. But then we also got to specify what is that income. It is for services rendered. Don't have to type that again. You've mentioned that about dozens of times already, right? So that is our income. And what is the total there? It was that 13,620 cash plus the 8,700 that was rendered on credit to that one corporate client of ours. So it gives us a total income of 22,320. And then we've got our various operating expenses, ladies and gents. What were the expenses? We had a rent expense, and we know that the actual expense was 1,600 because the other 1,600 was paid in advance. And one thing I want to point out here, ladies and gentlemen, because I know some of you have not been taught this at school, but this is now important for us. We're not at school anymore. We are now at university. So we are now preparing to become professionals. That's the difference. When you're at a university, you are preparing to become a professional person. So when it comes to expenses, they have to be shown as negatives. They have to be shown in brackets. Why? Because you know that in our general journal and in our general ledger, we have a debit side, we have a credit side. But when we draw up our financial statements, we do not have a debit side or a credit side. So there's got to be a way in which we are going to distinguish between the two. And in our statement of profit or loss, the way that we do it is to show all our income items. Well, what is an income? A good thing or a bad thing? Just type for me, income. Is it good or bad? What would you consider income? Good, 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 good. Yes, yay, good. I've got income. So therefore, it's a positive thing, right? So we're going to show our incomes as positives. What are expenses? Duh. What are expenses? Good or bad? Bad, bad, bad. Unfortunately, it's a necessary evil. Okay. You cannot generate income unless you incur certain expenses. Hopefully, at the end of the day, you make money out of it. You make a profit out of it, right? So it is not a good thing, but it is unfortunately, like we say, necessary, a necessary evil. So therefore, it is a negative thing. So all our expenses we are going to show in brackets as negative figures. We had the telephone expense. So we've dealt with the rent expense. You all know where that comes from. That was just the telephone expense. Here we've got the hair care products used, or I would have preferred that you rather say hair care products expense, but used won't be wrong. I'm just saying that I would prefer the word expense instead of used, but that would not be wrong. That's also good. So it was the 9,000 that we spent on it, less the 5,200 rand that we still have on hand. That is part of our inventory. So the expense on hair care products during the course of the month was 3,800, right? We had salaries that we paid to our stylist of 12,400, and we had that depreciation expense. So we add up all our negatives. It gives us a total negative of 20,350. So that is our total operating expenses for the month. We deduct that from our income coming from our services rendered, and that gives us a profit for the month of 1,970 rands. Right, so that is simply how we draw up our statement of profit or loss. Now we've converted, what have we done? We've converted that data, the transaction data that we had, we've converted that into information. This is now useful information because now the owner or whoever else is interested in this business's affairs can see, right, this is what happened. We generated that kind of income. We've had to incur those kinds of expenses. And what were they? We can see there for ourselves on what we expensed it on, right? And we can see there for ourselves that we actually, thank heavens, made a profit at the end of the month. Hopefully, in the second and third month, as the business grows, the profit will also grow, but at least the owner's salary is included there, right? So she's already paid a salary, so this is almost like a little bit extra, almost like a bonus. Thank you, I've made a profit besides my salary, right? Because I'm the business owner. Let us just pause there, ladies and gents. Any questions on that, on the statement of profit or loss? We'll obviously do another one on Monday, but then we're going to follow the actual route where we start with our source documents. We record the transactions in our general journal. We post them to the general ledger, and then we draw up our financial statements. Any questions? Doesn't seem like it. Okay, so now let's go to our next. Oh, by the way, I've now already stopped sharing. By the way, that total, the profit for the year, I just needed to mention that profit for the year will now be transferred to your next statement. The next statement is our statement of changes in equity. So we have to transfer that to the next statement. Let me just go and find that. It's all there on your Blackboard website. You are the only class group that has it available, but I'll make it available to the other class groups after my financial accounting 2 class later today. Let me just go and find that and display that. Just waiting for it to come up on your side. Excuse me. And there it is. So this is the statement of changes in equity, statement of changes in equity for the month ended 31st of March 2014. We saw that it was the first year of business. By the way, you can give this column a heading. This is actually your capital column. So perhaps just make a note there. I'm actually sorry that I didn't type it in there. So that will be your capital column. Later on, when we do more advanced statements of changes in equity, we'll see it can have many columns. We can have capital, we can have any other kind of equity. So this for each kind of equity that you have, you'll have a column, right? So we only got one kind of equity at this stage, and that is our capital or owner's capital, right? So please make a note. Give it a heading, capital. It started off with no balance because it was the first year of business, first month of business, sorry. And then we saw that the owner, Ayesha, made a capital contribution of 50,000 rands. If she had withdrawn any money for personal usage, it would have been indicated there as a negative. Just make a note of that as well. The drawings, same principle as with the other statements. We haven't got debits and credits. We've only got one column for each type of equity. So therefore, the increases in equity will be shown as positives and decreases in equity will be shown as negatives. What else have affected our capital now? The profit for the month. So we now go and add the profit for the month. 1,970 rands there, ladies and gentlemen. So we see that the total balance on our capital account, owner's capital account at the end of the year, at the end of the month, sorry, I keep on saying year because normally I work with annual financial statements, is the 50,000 that she contributed, but that has now grown through making a profit. It has grown by 1,970 because the business generated a profit, right? So the total capital balance at the end of the month will be 51,000. Sorry, 51,000. Don't know why it doesn't want to go there. Let's do it from the other side. 51,970 rands. Right. Any questions on that statement of changes in equity, ladies and gents? Doesn't seem like it. Okay, so now we can go to our statement of financial position, where we are going to list out our assets and our liabilities and our equity. So we already know that this figure has to be transferred, that 51,970 has to be transferred to the next statement. And the next statement is our statement of financial position. So we're going to transfer it over from the statement of changes in equity to our statement of financial position as our capital. Right, we know that. So let us stop sharing this if there are no questions. And then let's go and have a look at the statement of financial position. Just waiting for it to appear on your side. It's coming, it's coming. Now, we also know from what we discussed in the first term that when it comes to our assets and our liabilities, we've got to distinguish between current and non-current. And you remember we said that if you intend to use the asset or to repay the liability more than a year after the end of this financial year, then it is a non-current asset or a non-current liability. If you are going to be using it within 1 year after your financial year end, it means it is a current asset or a current liability. So now let's go and see what it looks like. Let's maybe start with our equity or our capital, ladies and gentlemen. So there we've got our equity and liabilities. First of all, the equity part, I would have actually below the equity part, I would have preferred to have another line item there describing it as owner's capital, right? I would have preferred that. So you've got equity and liabilities as the heading for this whole section. Then you've got your equity section and your non-current liability section, if you had any, which we don't. and then your current liabilities section. But I still would prefer you to then, below equity, indicate there that this is owner's capital. And that is the amount that we've transferred over from our statement of changes in equity, right? You remember we saw that amount less than 2 or 3 minutes ago. Now we've got to go and describe our assets. So first of all, our non-current assets, ladies and gentlemen. So our non-current assets, later on when we do property, plant and equipment, or PPE in the fourth term, we'll see this also requires a note. The note, what will the note indicate? The note will indicate that the cost of the equipment was, what was it, 54,000 rands, and the accumulated depreciation is 1,800 rands, and that is where that carrying amount comes from, which was right at the bottom, one of the totals of the equipment in our accounting equation worksheet, right? So our non-current assets, we describe them, it's equipment, 52,200. Here we disclose the carrying amount, which represents the cost of 54,000 less the accumulated depreciation of 1,800. Then our various current assets, ladies and gentlemen, we've got inventories. As we've seen, the inventories consist of the unused hair care products. We've already seen that the unused hair care products that we are still going to be using into the future is 5,000, as a value of 5,200. Now we do not only have trade receivables, we've also got that prepaid expense, that rent that we paid in advance. So now we are going to actually disclose it as trade and other payables. Our trade payables, which is our debtors control account, or our accounts receivable if you wish, that was the amount that corporate customer owes us, right, of 8,700. And then we add the amount of the prepaid expense, the rent that we paid for the following months, we paid in advance, and that gives us a total trade and other receivables of 10,300 rands. And then we've tallied up our bank account. We've had a look at our bank account. How do we disclose it, ladies and gentlemen? Please get used to this, because this is a term that is specifically mentioned in International Accounting Standard number 1, which deals with the presentation of financial statements. We'll do IAS 1 at the beginning of our second year, right? But please get used to the term, so we don't disclose it as bank or petty cash or whatever. We combine them and we call them cash and cash equivalents. So that will again be the end balance in that column of our bank account on our accounting equation worksheet. We add up all our current assets, ladies and gentlemen, all those 4 items, and we see that our total current assets come to 19,770 rand at the end of this first month of business. And then we add that figure plus our non-current assets, and it gives us a figure for our total assets at the end of the month of 71,970. Right, then just lastly, our trade and other payables. We didn't have actually other payables. It is only the trade payables, but once again, I suggest we get used to this description, because again, it comes from IAS 1, which we'll deal with in financial accounting 2, but let's just get used to the terms. So this is how we disclose it. Even though our account, our ledger account might be called creditors control, or our ledger account might be called creditors, or our ledger account might be called accounts payable. But when we disclose it in our statement of financial position, we disclose it as trade and other payables. In this case, like I say, there's only trade payables, and that is the amount that we still owe to that one supplier, the supplier of the equipment. Remember, we purchased equipment for 24,000, but we've paid 4,000 of that 24,000. So the remaining balance outstanding at the end of this month is 20,000. So we go and we add up our total equity, which is our owner's capital. If we had any non-current liabilities, we would add it to non-current liabilities. In this case, we don't. and then we add up also our current liabilities, and we see that the other section, the second section, the bottom section of our statement of financial position, which deals with our equity and liabilities, has a total of 71,970, right? And those two amounts have to be equal, right? In the old days, they used to call this a balance sheet. Statement of financial position means that it is a snapshot of its assets and liabilities and equity at a specific date. That is why it's called at the 31st of March, not for the month like the other two statements. The other two statements said for the month ended 31st of March, but this is now a picture snapshot on that date, the last day of the month. So it's as at the 31st of March 2014. And like I say, that figure and that figure there has to be equal so that this statement actually balances. Right, ladies and gentlemen, I'm actually pretty happy that we are finishing in time. We've got about 4 or 5 minutes left. So, are there any questions from your side on this exercise? It is available on your side. You can go and work through it in your own time again if you want. Obviously, the link to this recording I will also post on Blackboard. I'll only post it on your site now. I'll post it on the other sites later because I've got a financial accounting 2 class just after this class, but I'll do yours first, hopefully. That's the intention. So, any questions from your side, ladies and gents? Any questions? Going. Gone, as they say in the market. Okay. If there are no questions, ladies and gentlemen, then I thank you for attending this class. Don't remember to officially leave the session. You know, there's a little process that you have to do. You've got to go and click on leave session. Thank you for attending. Have a lovely day further, and then we'll talk again on Monday during our afternoon online class. Thank you.